It's an even greater pleasure to welcome Sathya and advocate for today's program. The people who have come here are extremely fortunate to listen to you. He's one of the most, and we don't know whether you can call a person who's specializing in so many areas as a multi-talented person, because talent is something which we associate with something different, but Sir is a chartered accountant and an advocate and PhD, and I have heard that he also, Saralama tells Narayanan in Prabhata. So, you don't know how to describe such a person. He recently finished his doctorate and he is now officially Dr. CA, I would say CA first. CA, advocate, anything else? Anything else which I have missed? There is a lot here. He has done quite a bit of certifications, and he's an associate member of ICAI, CMA and company secretary. Sorry, I forgot that. He's a triple professional. Has done the PG program in Treasury and Forex Management from ICFAI. He's also a CISA, and he's done the IP program, Intellectual Property from the WIPO Institute, Geneva, and graduate certificate program in International Arbitration. I think I missed those two. And he's worked in large Indian corporates, MNCs and banks for over 15 years in senior positions. Enrolled in the Bar Council of Tamil Nadu and Pondicherry in the year 2001, and currently a partner with Weisenworth Advocates and Consultants. And his practice areas include tax laws, IPC, corporate laws, intellectual property law, and regularly appears before the Commissioner Appeals, ITAT, CESTAT, NCLT, NCLAT and High Court. And it's always a pleasure to see him in action in the courts. If any of you have time, log into NCLT or go there physically, you will see him in full action there. And of course, High Court. He's a regular speaker of at various forums in IPC, tax, IPR and tech law, corporate laws and topics of general importance, and is a regular writer in various professional magazines. Currently, he is the honorary advisor for direct access to Andhra Chamber of Commerce, member of the expert committee in corporate laws and KPMG, and of course, he's got the doctorate in GST. Anything which you left? Something new should come up in our thing. Okay, and like I told you, he's got a chamber in the High Court, and he's a partner in Weisenworth. And since he started off as a chartered accountant, I'm sure that his long-standing experience is going to benefit all of us today. Thank you so much. And great to welcome all of you. I see all of my friends over here. It's really nice. we hope to see you more frequently also. Yeah, a small memento on our behalf.
Very good evening. I hope I am audible. I don't need a microphone. Let me at the outset thank the Photoshop. Thank the organizers, the institute, office bearers, and everything like that. We start. And quickly, as chartered accountant, we don't have to go into the smaller basics, though we call it back to basics. We have been grinded. Whenever we did, we got grinded, and it would have really gone in. What I thought, having seen what they have, we look at more in terms of practical perspective as to how the whole game of property transaction gets played out in reality. And you have to tell me whether it's okay. If it's not okay, then we'll go back. Anything can happen. What I also thought is that if we can look at them from decided case laws and either imported or many other things which we have handled. I've handled cases where property transactions, how it is viewed from the department perspective, what can be done. We can also look at joint venture, agreements, that are they entered into, and how it is perceived, what can happen toward all that. Now, this is one, law. So generally they say, if cases go to Supreme Court, settled law gets unsettled. Settled laws get unsettled, so that profession can, the legal profession can. That's the hope in every profession we do. So no exception. Especially if you look at, out of the 5 broader heads of income that get taxed, many of the other heads got settled. The last one was 14A, that also got settled. When the department felt there is nothing creamy in it, they brought in 14A. Started with Godrej Poincy of Bombay High Court for the rule. Everything went on again. What happens to clause 1, clause 2, clause 3, all that. Now, out of the 5 heads, if I have to say that, which one is till date, either in terms of factual way it is looked at, or from a question of law we look at, which is the one which not got settled is capitalized. the uniqueness of capital gain, that's why I thought capital gain, income tax implications on real estate transactions. Because we'll just roughly look at what capital gain is, that's all. Why is this? Because of this larger picture. And today its relevance is also because of this larger picture. What we'll see is that real estate is the second largest employer in the country. Unfortunately or unfortunately, it's the most unorganized sector. So the room for both the professionals and the room also for the department is very large. A lot of cash transactions, a lot of transactions where there are mismatches happen. And everywhere, wheels move everywhere. It's not in one direction. Gears are there everywhere and it's moving. The state government has one. Today they will say this is the guideline value. Tomorrow it will change. They don't understand the implication at 50C or all these keep moving. And you have a radar, completion certificate, what will happen to it? All these keep moving on. So that's one. And second is, there has also been a lot of churning changes that kept happening. We saw demonetization in 2016. Post that, there was a huge sluggishness that happened to the real estate business. Post demonetization. We understand. After that, what has happened is that COVID set in. With the COVID, there was another change that happened with the real estate industry. What happened is that people just got used to the way post demonetization is. Transactions started happening. A lot of transactions started happening. Now, in between, you would have also seen, analysts talking, the stock market going down. What Amit Shah had said recently, why now? You'll make after closure. Exactly this is what happened. And these transactions were completely different. Each transaction was structured differently. And each, we know how real estate is more local. It's more local. The other challenge that comes up is because of the faceless assessment and the appeal. The officers don't understand the local dynamics. I was just talking to a fellow professional. He's telling, sir, you cannot sell sale detail, you cannot sell. And then he quoted me that Bhubaneswar Development Authority, Delhi Development Authority judgment, general judgment of Supreme Court. So, don't go by that. What we practice here is totally different. You enter into a joint venture agreement or a sale agreement, and you give a power of attorney, with that power of attorney you will sell. But there what is happening is that the property cannot be sold at all. Those properties are getting sold through power of attorney and sale agreement, the combination. Now, for example, DDA plot, Delhi Development Authority plot, if it is there, it cannot be sold. If you have to sell, you have to obtain approval, like our SIRC court. You have to obtain approval from them and they have to sell. If you need to obtain approval, they say officially they charge 25% of the market value. Whatever market value is there, to give the approval, they charge you 25%. Nobody wants to do it, and this, it changes hands every 2 years. So you can understand. Even though it's 99-year lease, those plots it's not going to happen. So that's why they are doing that. That is what the Supreme Court had said no. So this is an example just to understand that the dynamics change, it is more localized. We look at all those implications as we go around. Now, also now the real estate is picking up and the department is also looking at real estate transaction more keenly. Well, what happened post demonetization? cryptocurrencies gained importance in terms of an alternate investment. Alternate investment, the way it is. After the kicking in of the electronic payment mechanism, especially the UPI, the chances of moving and crypto also became very volatile. And a lot of restrictions came in through FEMA rule. So what happened is that people started thinking the real estate industry is the real. That's the real estate. Virtual assets are not going to be. That's why VDA did not pick up at all. Though they brought in the amendment for VDA did not pick up at all because of a lot of restrictions that were placed, and with also Web 3 kicking in, not only digital payment, Web 3 kicking in, it changed the dynamics completely. Now let's look at 3 questions to start with. Answer these questions, now quickly. If a person has lived in a house for 20 years and then gives it for development, it is a clear case of capital. We all know. Right? But if a person buys the house, immediately if he sells, let's say in a plot, it's an independent house, a person has bought, immediately he sells, say in 2 years time. And a builder buys it, and he is going to bring up a huge apartment complex thing. Can it be still a capital gain transaction? Say, or can that be a business transaction?
Depends on the agreement.
When it can become a business?
Yeah, but this is as a joint or stock in trade.
If it's a joint, yes. Now, what we need to understand is the term trade does not mean that you have to be continuously into that particular business forever. That's what Supreme Court says. Even if you do one transaction in a lifetime, it can also be treated as a trade. And it would fit into the definition of a business. Parameters is what we need to look for. The second is we always know a builder, if he has a piece of land and kept it as a stock, it's a clear case of business income. There is no ambiguity. Now look at this. Now, broad questions that come as land transfer. Is that a transfer of a capital asset or a business asset? Would depend. These are factual where you need to pick. Can entering into a JDA amounts to carrying on a business by a landowner? Yes, no?
Yes.
Huh? Yes? How many, anybody saying no? How come yes?
If RERA is applicable, then it becomes.
Correct. That's why I said removing. Now in RERA, again, interesting one. In RERA, it says promoter, the constructor, both have to. In many of the cases, they don't. They don't take a joint application at all. They don't take a joint application. We recently concluded a joint development agreement, over this thing. Where we said very clearly, the landowners just doubt. It's a listed company. So we said, we'll do it only for the developer alone will be the promoter for error. In that case, it wouldn't. It wouldn't. So RERA makes that difference because many of us, I think, I don't know whether it's changed. In +1, +2, there were accounts called consignment, joint venture. Remember that? So joint venture is a separate entity, it's a AMP to say so. If you get registered in RERA, that amounts to that joint venture, what we study, which we never applied. This amounts to this. That's what exactly. Now, what happens when usage of land gets changed? into a business asset. Say, for example, I've had a land. I've been keeping land. As a proprietor, I also run a business. It's into real estate. Now the concept of two balance sheets were all there. I don't know whether how many of you recollect this. We used to have two balance sheets. One for the proprietary business, one for the individual, or overall. Where this is also included. Now in IT, where do you find these now? To these days? You only one. They say, first is, you fill up padadappa. 80 la poide, 44 80 la poide. Illa professional da 80 la poide. Oru kelvi illa. That's where they are. So that's getting blared now. They say tomorrow, you can't say, that was my personal asset. He said, come for a joint venture, so I entered into a joint venture only as a landowner. Look, otherwise I am only into construction business. You can't say all that today. So that's important. Now, again, this also applies to agricultural land. In many cases, what happens is that the assessing claim it as agricultural land. We exempt all criteria applicable. The department says no, you immediately put that to use. Only capital gain doesn't apply. It can be business income. That's where most of the fight is. Now, if we take today the disputed transactions as such, if we leave out a survey, an addition made under section 68, 69, 69A, if we leave out these, then majority is on capital, on transfer of immovable property. Then next one is, can receipt of sale consideration in kind or something linked to a revenue, what will happen to us? In case of a JDA, if it's a business system. Now let's look at the tax issues that normally comes to a landowner. We get in there. These are really a starter for us to taste, so that we increase our taste buds as we get along. Let's say this is a sort of a case to understand. Land held as a business asset transferred at the time of JDA. Whether JDA may be treated in the nature of a business joint venture or no? Why this question is, if I got a land, purchased a land long back, all that I can do is that market value as of 1st April 2001. That's where it will get for indexation. I would have purchased it for 5,000 rupees. And somewhere in OMR, let's say a ground is 5,000. It will be in acres. So obviously, or 25 or 30,000 or 50,000, I would have bought an acre. OMR city. No, we know how much it would. In 2001 also, it is not that big to get into this thing. Can I convert that as a business asset just before the JDA, so that it will be part of business income? Now, when it comes to business income, what happens is that the entire expenditure, whatever I want to put in, are deductible for me. If that be done, now that's the background of which we are talking here. Whether if JD, the joint venture, separate taxable entity comes into existence as an AOP or not? Next question. Let's say if I convert that and it becomes a business joint venture, then even otherwise, if you look at RERA, promoter has to be both the landowner and the person who is constructing it, building it, the builder. That because will it be a separate AOP, taxable? And will we be able to get that advantage saying that profits like it? I'm selling it at one value. takes. Shifting out there, their expenses all to the book. I can take that out. That's what we look at. So then, what will be the year of taxation in this case? When it got converted, or when it gets developed into plots, or into either plots or completion certificate may not apply. That's why these questions are coming up, because we know there is one section that we talk about. That section, if I have to say that, it's faltu. The conditions therein would not apply in many cases. I'll tell you how it is. We'll see that. That's why I'm putting all this. Probably if we talk of JDA, we will all be thinking that section has come now, so we don't have to worry about it. We'll apply that section. It's completely wrong. Misplaced. That's the exact reason why we are to understand it. Okay. Otherwise, I would have said, joint venture we look at, then probably we could have gone there straight. Not these questions, because all these questions we look at how all this gets affected there. In case UDS is directly transferred by the landowner to the customer, only building is constructed, what will happen if it is a business transferred as business? These are broad questions that needs translation. Now, let's get into capital gain. Okay? Let's get into capital gain. Swing to the soup after this started. Okay? Reverse. Now, we all know income is defined under section 2, subsection 20. If we broadly look at income, except one or two, almost all of them are revenue receipts. We hardly have capital receipts. Now, capital receipts would include any non-compete receipt that is done. Still, it is dicey whether all non-compete receipt would get taxed. In spite of Gillette India judgment, in spite of Podar judgment, all non-compete would not get taxed under section 28. Because after the amendment also, after including non-compete as part of income under section 28, business income, courts have severally held you cannot blindly say if it is non-compete, it is taxable. You have to go through the agreement. Depending on the character, if it is capital in nature, even if it gets covered under section 28, it will not be taxable in the hands of the recipient. The next one is insurance receipt. The third important thing is whatever we call capital gain. Capital gain is the only one in the whole Income Tax Act where capital receipts are taxed. Other than capital gain, be it non-compete under 28 or elsewhere in insurance under 28, they have a dicey distinction depending on the facts and circumstances. If it is treated to be capital, it will not be taxed. Capital receipt. If it is a revenue receipt, only then it gets taxed. But when you sell an asset, if it's a capital asset, when you sell it, whatever you receive on sale is a capital receipt, and even though it's a capital receipt, it is taxable because it's an income under section 224. This in law we call as a legal friction. Because normally income would mean only revenue income, revenue receipt, revenue income, not capital income. Now only one exception is this. So this would get taxed. Now, this term capital, legal friction is very important because whenever there is a legal friction, the general jurisprudence, interpretation, principles of interpretation is that it cannot be stretched beyond what is. This is very important. It cannot be stretched beyond what is said in it. Now this is very important even when we talk about JDA. Now quickly, now we all know capital asset, right? Enduring benefit, whichever assets give, that's a capital asset. We know short term, long term, 3 categories: 12 months, 24 months, 36 months. We don't have to repeat, we all know it. Now, transfer is defined under section 2, subsection 47. Okay. All we know it starts with sale, exchange, extinguishment, all that it starts completely, right? Goes on. We have all the 5 clauses there, which are all relevant. We see all that. More important for us is the one which deals with 53A. Then indexation. All long-term capital assets, when it is sold, the cost of acquisition or cost of improvement can be indexed, and the base will be April 2001, shifted from 1980. Cost to the previous owner, we also know this very clearly. Whenever we have not acquired, it has come to us for free of cost. Whatever the cost belongs to the previous owner. The holding period would also be the period from which he has been holding. The exemptions mainly 54A, 54F, then 54EC and 54G. 54G is transfer. Whenever you transfer, GEA and all is also transferred to special economic zone. We look at now structured transaction. We are settled with the main course. Are you comfortable with the flow and the pace in which we are going?
Yes.
Right? Language is also okay. Now let's look at an illustration to start. Let's go till whatever time we can, then we'll stop. 7:30? 7:50? 8? No, whatever time suits you. 7:30. Yeah, that's normal time. Okay. Now, total land area, let's say it's 10,000 square feet. Built up area is 20,000 to FSI. 50% to the landowner, 50% to the developer. 10,000. All these are, I've just put for us to understand. That's all. No significance of dates, with respect to the enactment. Date of development agreement is 1/1/2018, and the possession was handed over to the developer on 30th April 2018. Only idea is 2 different financial years. That's all. 2 different financial years. Now, either the possession is handed over to the developer with or without power of attorney. Now, building completed and landowner share was handed over on 10th of May 2019. You don't ask me how it got completed in 10 days time. Okay? I've just put date, it's a date, that's all. Nothing beyond it. When is the transfer complete? So date of completion of transfer under section 2 subsection 47 is the one which decides when the capital gain is accrued. Right? Payment can get shifted. So that's important. Let's go quickly.
Transfer happens in the hands of the landowner.
Landowner. It's taxable only in the hands of the landowner's capital.
In 34.
34.
Building completed.
Building completed. 10/5.
It should be on the date in which the sale agreement takes place.
Sale agreement, okay. Whenever it is sold by the land developer. Okay. Landowner whenever he sells, or the developer whenever he sells.
Developer normally takes the POA from landowner.
This is with or without POA?
Well, it doesn't matter, but it should be on the year of sale.
Year of sale.
The way day until the agreement is executed.
Great, okay.
And after getting the completion certificate.
After getting the completion certificate. Okay, great.
1/1/18 only.
1/1/18
only.
1/1/18 only. Date of development agreement. Okay. Others I take, they represent one or the other.
See, only when this
sale registration happens to a new buyer, only then the transfer happens.
Transfer.
So, like someone already told me.
Perfect.
So, the reason.
Great. Now, section 2, subsection 47, clause 5. Okay. This is what it is. Any transaction involving the allowing of the possession of any immobile property in pursuance of an agreement as past performance in terms of section 53A of Transfer of Property Act would amount to transfer. Okay. What it means, before we fully understand this, we will understand what is 53A of Transfer of Property Act. When a person contracts to transfer any immobile property, let's say even a sale agreement or a development agreement, and the transferee has in part performance of the contract taken possession of the property and has done something in furtherance of that contract. He has to do something in furtherance of the contract. Only then it covers 53. Now let's come back here. So you have to substitute all those words for this word 53A. Now quickly for us to understand, now something else needs to be done, not only taking part performance, but also something should be done in furtherance thereof by the transferee, not the transferor. Transferee should have also done something in furtherance. Only then the transfer gets effective. When we miss out that, what happens is that we always feel part performance. Sir, in part performance, the land is handed over to the other, and once the land is handed over, it's done. No, that's not the case. No. This is all decisions in relation to section 53A of Transfer of Property. Willingness to perform is very important in 53A. That willingness to perform is not just a statement of intent. Now, if you look at any agreement, there will be 4 components to an agreement. You all know, I don't have to tell you. For simplification, just to refresh memory and understanding. First is the title and the execution. Then you have the parties. Then the third one is called a recital, which starts with whereas. The word whereas, starts. Recital it's called. Then you have the operative part of the agreement. Then the execution. Now, when we look at the recital's purpose is only a statement of intent. Not only that, the operative portion also is only a statement unless it's performed. It only vests rights and obligation on parties to the contract unless and until they do something in furtherance of it. It's only, so they say, not be a statement, not just entering into an agreement. It means otherwise, not just entering into an agreement, there has to be willingness to perform in section 53A would mean you have to do something more beyond.
Like what,
And-
sir?
Like you have to
I'll give you example of this. I'll give you, sorry.
you have to pay. Then once the payment is made, is that the
Payment would also be a part of it. Payment would also be part of it. Now, willingness to perform should also be just not willingness to perform, it should be unqualified and unconditional. This is a judgment. Now, so only then it would get covered under 53. Mere statements would not. And it need not be performed in a particular sequence. It can be in any sequence. It can be in any sequence. That's why 30th April, 10th May, handing over is impossible, don't ask me questions. Okay? Possible. Very much possible. What can happen is, I can give it on leave and license. I can give a license for the builder to come and do it without handing over. Now by a license, by giving a license, you are not handing over possession at all. And now how many of you are familiar, I am not aware of, because if you look at, there is a lease agreement entered into, there is a rental agreement entered into. Many of us don't know the difference between lease and rental. Let's not worry about it. Then third one is leave and license agreement. In leave and license agreement, the so-called tenant, license holder, do not have any legal right over the property. In lease, he has a larger right. In rental agreement, the tenant has a lesser right than lease. In a leave and license agreement, the so-called tenant, I'm using only so-called tenant, so-called tenant does not have any right whatsoever. So, the property can be the immovable property, the land can be given on a license to the developer. He can demolish the old building as a licensee and he can construct also after completion. No. Possible.
So in that case, aren't you documenting transfer of developmental rights? Where GST will play a role there.
Transfer of developmental rights will also not come. That will also not come. Your question is very pertinent. Now, if we structure it in such a way that where RERA registration is also done in the name of the landowner itself as the promoter. It wouldn't. The TDR would come in only when you enter, only the sharing would alone get documented. And that too, you can do it in such a way that, this portion would be for whatever you do inside, and balance would be a revenue share sort of a structure. So, even in case, if somebody argues, it all depends on the structure of the document, the JDA that you do. If you can, even in worst case scenario, even if somebody argues that it's a TDR, the GST would come in, it would come only for a smaller portion of it. We've just done one. JDA, this is for plot, only plotting, not any construction of land. Larger portion of lands have been taken. And it will be plotted, taking CMDA approval, you need roads to be built, you need other this thing. My colleague was also asking me yesterday as to what do you mean by pre-designed plot or something, that's all. What it be, even the electricity would be ready there to be plugged in. You can just construct. Water facility would be, through up to your plot. Every plot will also have pre-engineered plot or something of that sort. Now, even if that, what we have done is, we have said this is the expenditure for development, and up to this portion, whatever comes first would go to the landowner. Beyond this, if it comes, the ratio would be this. Then what will happen is, in the first portion of it, that would capital gain would kick in. And these we have done it as two different agreements. Two different agreements. So the first one, as such, when it is done, it would be for only it will be only a capital gain transaction. pure capital gain transaction. The second would kick in, only because you need to earn so much. Beyond that only this is going to kick in. Otherwise this agreement itself is dormant.
The second case, what you said is right, sir. In the second case, I agree. You develop the plot in such a way that you do the construction activity and go live there. That I agree, because the landowner, he spends the money. What he would sell the plot at 5 lakh of rupees. After the infrastructure, he might sell it at 15 lakhs. So he'll claim it as expenditure. All that I agree. The same thing is in a joint development agreement where there is a landowner developer share. This will have it's a very tricky situation.
There also it can be done.
But I think it should be a little bit more trickier than,
It may sound trickier. Only thing is that the transaction is in the web. That's all for you to understand. It will be spun in webs for you to understand. That's all. You have to deal with it. Now, quickly let's understand. These are the different points of accrual of income, capital. This date of execution of development agreement. Let's see, we had use here, right? Let's see what is missed out. Second is date of handing over of possession, which we also said. Handing over of possession coupled with power of attorney in favor. If it does mean there is no power of attorney given, only possession is handed over, it would not amount to accrual of income. The fourth one would be date of execution of the first sale agreement, sale deed rather, of the promoter share, of the land owner share. That's what Madam was stating. Then date of handing over of landowner built up area. This is something that we missed out. Hey, you built the entire this thing. As a landowner, when did I get back my property? Only that day. It is until then it was all happening. Work in progress. Now this is more a comment, for us to understand. If clever drafting could mean having, different clauses which could avoid these two. 247, 5 and 43A requirement to be met, then it can happen. Quickly, we look at a few things. Whatever we saw here, for all of these, we have cases. For all of these, we have cases. So, what it means, the bottom line is how you draft, how you structure. That's all. And probably getting the present value of money. If you can convince the landowner, the present value of money is this. This is what you are going to get. Can we work out the structure the way it is, in tax beneficiary. We look at the decisions. One sample. Capital gain will not accrue provided possession is handed over to the developer purely as a licensee. That's what I said. Legal license. It holds good even till date. As we talk in May 2024. Second is handing over of possession with power of attorney. Date when irrevocable power of attorney is given. Can power of attorney be irrevocable? First question. Can it be irrevocable?
You mentioned it is irrevocable.
When it is mentioned, it is irrevocable, it is irrevocable. Yes, no?
By mutual consent.
Mutual consent. No, mutual consent never it's going to happen. See, it's never going to happen. Now today, the biggest problem that we have, in most of the cases are this, especially when it comes from the land. The problem faced by the land. For 1 crore rupee, the land is sold. Builder pays 1 lakh, 1 crore. Don't ask me how. Cash. Check, everything included. Okay? Please pay. After this, probably a joint venture agreement is entered into all that. Power of attorney is also taken. A signed letter is also taken that all consideration is paid. If you look at the power of attorney, there in the last line they would have written, for execution of this power of attorney, no consideration. This is a standard. Okay. Without that, even if you say consideration is taken, the sub-register will not exist. The biggest problem is that. No. With this, the department comes back. Department says, look, this is a public document. With the sub-register, clearly says that you have not taken consideration. No. We see all these sale things. Probably they have left out all cash component. What did he? What the builder has sold. What the builder has sold, he would have sold, after 3 years or 4 years, he would have sold. 1 crore would be 10 crores. By then, the department comes and says, look, you are the principal. Look at the section 230 to 234 of the Indian Contract Act. The principal is responsible for all the acts of the agent when it is done within his authority, quote unquote. So you have given power of attorney. Very clearly it says that you have not taken consideration. So you pay capital gain for this 10 crore. No, that is cheating. This is the problem that we have. The second thing that we need to know is that all power of attorneys are revocable. All power of attorneys are revocable. There is no power of attorney, and power of attorney and will. These two can be revoked at any point of time. Will and power of attorney, these are two documents which can be revoked at any point of time. Even if you write it to be an irrevocable will or irrevocable power of attorney, both can be revoked.
Even will. So if the father gives some property, he can pay.
Obviously, he can do that.
If he is alive, he can.
No, if he is not alive, he can backdate it to transfer out. So the concept of irrevocable power of attorney itself is alien to law. We have also been shown. In one Madras High Court judgment, 1958, before this income tax act, in which they say there is a consideration taken, due to which a power of attorney is given. Then it is a power of attorney coupled with interest. They have not said irrevocable. They have said it's a power of attorney coupled with interest. So the power agent also has some interest in that. That's all. It stops with that judgment. That judgment is not in the context of income tax at all. It's not a general law. So that is something of breather that we get, but unfortunately all our power of attorney say no consideration. Okay? So
So if you take consideration, then
it's coupled with interest. Still it is revocable. Still it is revocable. சத்தியத்துக்கு கட்டுப்பட்டு நாங்க ரிவோக் பண்ணாம இருக்கோம். அதான் ரிவோக் பண்ணாமனா ஏன் பண்ணோம்லாம் கேட்கவே முடியாது. Obviously, you can do that. No, if the person is dead, the power of attorney is invalid. You have seen cases where if you go to the legal head, they say, pay me now, only then I'll say. So, now if power of attorney alone is executed and possession is not handed over.
So sorry to answer. In that case, if there is a JDA with the power of attorney, what is the assurance for the builder if it is the only license agreement? Because there is no, it can always be removed, right? What if they develop and then this becomes removable? What is the assurance for the builder?
You have to structure it in such a way that revenue share are clearly demarcated in the joint venture. It cannot be the usual joint venture. We did one for an Hyderabad joint venture, in which it's only a license. It's only a license, and the JDA is structured in such a way that the revenue share is completely taken. It goes to the extent that power of attorney needs to be given in the this thing, and it will be escrowed. Those you have to take care of, the complications that may arise. It all depends on, what is the age of the landowner, what happens, how big is this, many factors are involved before you structure it.
So the general practices it will be like go to build and it will be like license and gently builders like Casa Grande is there.
Normally that happens here in Chennai.
Yeah, the general practice.
Normally is JDA with power of attorney, that's all. Possession will be, if it is a standard template, they will never talk about possession. Meaning possession is handed. Then the next question department asks is, paper ledger, sir, paper ledger, nera avanga vandu pannittu irukanga. Possession kudukama vittu paduvaanga.
Power of attorney is revokable at any time. So whatever he says, builder, whatever he says, no, it is revokable. He did it, but I am taking back.
You can, whatever transactions happen before revocation, for all that you are liable, responsible.
So no sir, my doubt is, for example, I am a landowner and I enter into an agreement with the builder. And I am still a landowner and they are building like 4 or 5 floors. So at the time of registration to a new buyer, I am saying I cannot stay and revoking the power of attorney. So what is the status of the building?
The state, this is where you need to understand. The status of the building is that, if you do that, the builder can file a suit against you. One for specific performance, if there is a JDA. Second is that what can happen is that he can claim damages from you in addition to whatever he has incurred. He can do that as well. So he can claim all that.
So we damages for this.
Not damages, including expenditures that you have
So you
incurred.
can claim all the
No,
costs
what?
incurred.
Cost incurred, as if he has made for you.
No, he will go. If I
You think so?
the expenditure of the property, whatever he built, then I can take back that land. That
How expenditure is only if he is an independent contractor, all the cost that would come to you has to be, right?
Yeah, no, that's what. He built it. It cost 2 crores for him to build it. I gave him 2 crores. So there is an agreement and everything. But now the cost is 10 crores. For me, if I get it back, if I sell it, it is 8 crores.
He is not going to be dumb. In all these cases, whenever exporting, okay, let's understand how actual diamond works. Let's say it's a plot where you construct 20 apartments. Let's say 10 apartments is for the builder, 10 for the landlord. And if all 20, okay, and you will say that in the JDA itself, normally they put, if lawyers and good lawyers appear for the builder, they ensure these things happen. Let's say 2 apartment or 1 apartment in the first floor of this will be handed over to the landowner, or if there are 5-6 persons in the landowner's family, these people will be handed over somewhere. Then after that, what he does that he say that 4 apartments are left, 6 people, 6 is handed over, 4 are left out. He will only sell. Marketing, he only has that marketing this thing. He will sell first all his apartments, his share of apartment, then he will sell the land.
What have you tried to stop that savings?
No, that also we have seen happening. That all. Now we appear for a landowner, we also tried that. That happened in for a complex that was built in Madipakam. So everything is possible. I'm telling you, if you are not shrewd, okay, you can just swaha. That's it. Possible. Precautions have to be taken by people whoever needs to.
Who has the upper hand, the builder or viewer?
Depending on how the agreement is, if you sign just on dotted line, you are taken for a right. You can't. You have to take care of yourself. You have to be vigilant.
So when making an agreement, you have to make sure that it is not perfect.
No, it is, one common mistake. Now, even in normal sales, many of them leave, is that they put, let's say a transaction. Now, we all know guideline value is much higher than the actual transaction value. What will happen in that case? Let's say the transaction value is 50 lakhs, the property. Guideline value is 65 lakhs. What we normally do, we just put 50 somewhere in between, and then clause 1 will be that. The operating portion, clause 1 will be that in the SAD. The last time we put stamp duty is paid for so much. And you will have that appendix A. Appendix A, where you will have all the descriptions, all that in a particular fashion that the registration authority needs, and there also you put the value. That value will be the registration value. Immediately you will get a notice under 50C. So obvious. So this is standard template. People think we know what it's available. Either pick up from the web, Google it off, or go to a writer. And the sub-registrar office clearly வச்சிருக்காங்க. அவர்கிட்ட போன டப்புனு முடிஞ்சிடும், நேரா போவான், சப்-ரிஜிஸ்ட்ராரை நேரா பார்ப்பான், ரிஜிஸ்ட்ரேஷன் ஆடும், நாங்க நிக்கவே வேண்டாம் வந்துடலாம். ஃபீஸ் கம்மி. As long as we have that attitude, that mentality, it will be shown somewhere. That's all. Now, what can be done is that very clearly you can write, though the transaction value is just, stamp duty is paid for us, this reasoning out is just, or it can be brought in. That is the document which is going to be the basis. A department cannot read, they cannot say that I'll accept this portion of the agreement and I'll ignore the other portion. Every document has to be read in whole. If that be the case, will they be able to tax it under 50C? Definitely they cannot, if it is properly drafted. That's the problem.
So how to draft it properly? We have to go to the draft.
I'm not here on
We have to go to a great lawyer. We have to
it's not a great lawyer or non-lawyer. Somebody who can apply their mind to every piece of information. You can't have it done as a template. Yes.
You've got to see what the location and all other criteria into consideration.
Many things have to be looked at before. Now, you can't just do something monotonously, mechanically. For everything you need to apply your mind to do it. That's the whole thing. Not great lawyer, dumb lawyer, all that, or writer. Normally avoid a writer, documented, because standard thing he can only do that. You can't expect anything beyond. It's like asking an accountant to do something which only a chart accountant can do. You can't expect an accountant to do something what only a chart accountant can do. Similar. Sorry. Now, if handing over of the property is linked to something like municipal permission or approval, all that, then what will happen? That's another question. Chaturbuj Dwarakdas case, one of the most celebrated cases. And in my opinion, this judgment still holds footing. In spite of amendment made, this holds footing. Cases like this, 18/8/1994, they entered into an agreement, original agreement. It's called original agreement. A sale agreement with a consideration of 1.86 crores was there in this. The court held this original agreement to be the development agreement. Based on whatever is there. This is more of a sale agreement. Almost the entire consideration was paid by 31/3/1996. Possession was given on 1/4/1996 and general power of attorney was given on 12/3/1999. Then capital gain tax was paid for the year 1999-2000. Department said no capital gain arose in the assessment year 96-97. The 96-97 they said because almost all the considerations were paid. Court held that capital gain arose on 18/8/1994 when this is by Bombay High Court.
Sir, what do you mean almost entire consideration? Percentage?
Some amount they'll just keep it, some 5 lakhs. So all this happened. So this is the basis on which we talk joint venture agreement epo sign பண்றாங்களோ அப்பதான். So all of you whoever said whatever is right. But we need to look at, we need to go into details. Because Soli Sarabji used to say, details are in black and white. You can't just go on some assumptions, because when you go and brief them, what Soli Sarabji does is that, for example, let's say 115JB, some this thing has to be argued. You won't tell him, I will also tell him, sir, you only argued in this higher Delhi High Court and section 115J, similar provision. So bring the book. When we give our book, he will not take our books. No printers allowed, sir. He will ask, from his library book has to come, Income Tax Act. I even wondered what will happen was, number purtha book ondu da avroda book ondu dane ella tax man pottadane. It will come to him. What he does that? He will read word by word, same section. Sir, Buddha nettu da innor case ku 115JBA padichingale sir. Adu okay da po idu. For him, he always says that you have it's in black and white. Every time the meaning changes, you will get different idea about it. So all of you are right, but only thing is that only the details would give you further this thing. Now next is Patla Nageshwara statement, Andhra High Court. Straight from there to we have to come here, west to east, west coast to east. 2003-04, an agreement was entered into with Bhagya Concessions. I don't know, some of you should be familiar with Bhagya. Cyber City? You all gone to that finance city, right? Finance city, where we are Center of Excellence? No? Okay. Where our institutes, Center of Excellence is it? They only constructed. Pursuant to which, he agreed to transfer the land for a consideration to the developer, giving him the 4 flats after it is developed. Now, the assessor received a token advance only and had handed over the possession of land, not substantial amount, only a token of it. Approval were all obtained by the developer. Yevo says that it got in 2003-04, which is when the agreement was entered into, applying the law in Chaturbuddhas. Assist said no, 4-5 par, with the consideration I received. Now CIT appeals, normally what he does, he upholds the department. He did the same. Now tribunal what they did, they looked at Chaturbhudas and Daru, all that, Maya, Shinai, all these are judgments which preceded this case. When the assessee handed over the possession to the developer, it is a clear case of exchange under section 2, subsection 47, amounts to transfer. So that is the date. Whenever he handed over possession. Assessee went on appeal to the High Court, Andhra Pradesh. Then it was an undivided argument. The amount of actual possession and agreement are contemplated as transfer in the sections. This is what the court said. You can't just go by the agreement alone. You can't go alone with the possession. Both have to be looked at. Whenever they go hand in hand, that's when it happens. Transfer is complete whenever the consideration is paid in its entirety. So it's said in 3-4, both these aspects came into play. So assessment here, 3-4 is there. The transfer happened. This is what Potla, Nageshwar. We'll move from these two, the capital. Supreme Court. Balbir Singh. Issue was there is a giving of possession of land for the purpose of development under an unregistered joint development agreement would amount to transfer giving rise to capital. Is the broad question. Important thing is that handing over possession, second is unregistered JDA is what we need to look at. SC referred to the 2001 Registration Act. 2001 Registration Act said all agreements have to be registered and unregistered agreements would not get covered under 53A of the Transfer of Property Act. Okay? If it is an unregistered agreement, 53A would not come in play. So, whether you sign the JDA or give possession, nothing of this sort would come in unless it is unregistered. The owner continued to be the owner of the property throughout the development and only the possession was handed over, that too with an agreement limited for the purpose of development, unregistered agreement. Why? Because if it is an unregistered agreement, specific performance, claiming a specific performance is difficult under civil law. Up to post 2001, it's completely not possible. You can't get. Other specific reliefs you can get, like injunctions you can get, but you can't get a specific performance. Therefore, what he said, in case of a JDA, you can't say part performance and all. In part performance, he handed over, he came, built, all that, you say, nothing of this nonsense can work. This is why, at the start I say, whenever you go to Supreme Court, law gets unsettled, so that it's easy for professionals to go on. Now with these understanding, three different, okay, we saw West Coast, East Coast, capital also, we will get into 45 which we normally think that it covers all the JDA. We will see this, it's very important. Now, capital gain, we all know that it arises at the instance of transfer. Transfer is the trigger point. What happened is that a deviation was brought in by the amendment to the Finance Act 2007, where this particular subsection was inserted, 5A to section 45 was inserted, and effective from 1890. Now, what happens in this is that, though transfer happens, the point of taxability got deferred. point of taxability just got deferred. Now, the word used, interestingly, in the subsection 5A is a specified agreement. They don't use joint development agreement or joint venture agreement, any of this. They use specified agreement. Now, memorandum to the finance bill, because memorandum is very important whenever we interpret any law. Now, what they've said is that to minimize the genuine hardship faced by the landowners, which is that by entering into a joint venture agreement, he may not get money. He may not get money in his hand. Then, if he has to pay tax, he has to be out of pocket to pay them. So, only for that reason this was brought. This is what it says. I will not read the rest of it. So, what they have said is that only when the completion certificate for the whole or a part of the project is received from the authority, only that to that point, the point of transaction would get shifted. So, the idea is only to remove the genuine hardship of the landowner. We will see what it is. Now we look at this section. The section is this. Starts with notwithstanding anything contained in subsection 1, where the capital gain arises to an individual or a HUF. So all the others are not. All the others are not. Fellow professor started arguing with me when it came to our partition. Sir, all vandrum sir. Summa idavatu sollirukanga. Then after that, I showed him this. Jiyo, naan neniche ellame vandrum idile sollitte. Very individual HUF. Second, from the transfer of a capital asset, being land or building or both under a specified agreement. So, the transfer ought to have happened through the specified agreement, not otherwise. If it is happening otherwise, then it would not get covered. The capital gain shall be chargeable to income tax as income of the previous year in which the completion certificate is received. So the twin conditions that we need to look at is that one is individual HUF. The second one is the transfer has to happen through this agreement. Some provision is very interesting for us. This subsection does not apply where assessee transfers his share in the project on or before the date of issue of the said data certificate of completion. What we normally do, I enter into a joint venture agreement with the when I say I am the landowner, because we are talking only from the landowner's perspective. Builder power of attorney இந்த வச்சுக்கோ அப்ளை பண்ணி யார் பேர்ல பண்ணி ஏன் பேர்ல அப்ளை பண்ணு அந்த கொடுமை என்னன்னா கார்ப்பரேஷன்ல போனாலும் சரி சிஎம்டிஎம் சரி they'll issue it only in the name of the landowner. They'll not issue it in the name of the builder. So I'm only doing it. I'm only doing it. Sorry? Power of attorney is to act on your behalf and to sell, to obtain. It will all be done in my name. I'm the landowner, you are the builder. I give you a power of attorney. What you do, you will make the application. You will make all expenses. All out of pocket will be from yours to get. Okay. And you will obtain. In whose name it will come? Come in my name. That's also I don't say. After all this, what happens is that they would do sir, working capital. Unless I book, what will happen? That's why I registration. Registration agreement போடலாம் பைசா வாங்கலாம் At least 10% are there. After that advertisement. You pay now 10%, balance 90% you can pay after completion. For them the 10%. GST full up complete GST. Other when you do this 10%, sale agreement is entered. When you enter into a sale agreement, though it says it has to be registered, what can happen is that you are ensuring that your rights are given to a third party as a landlord. Before, if he transfers a share in the project, prior to that completion certificate, then it's not offered up. Page out of that. And they've been advising all the guys. Before getting completion certificate, self-registration will happen, that's all, complete over. How do you get this benefit? 99% all projects go by this. So, 5A has no application at all. 5A has no application at all. This is in those cases where you just simplicity, you enter into a joint venture agreement. Everything is handled by the company, the builder, and the entire, because the entire sale happens, you are enter into agreement only after the completion certificate is issued, which never happened.
So what is the sale has not been
Sorry?
the sale has not been made, okay? This is my share. Later on I can tell that, see, look, that is builder's property, he sold this, only my share comes
You
to.
will have joint venture like this, sir?
No, I'm just saying, for this benefit,
How does it matter?
I
Any
know
of
the builder, I trust him. So he can apply like that.
Hey, whether it is his share or your share, the land belongs to you, right? The entire land belongs.
Transfers his share. I'm saying that but there are 10 buildings, means there are 10 flats. So later on I can say that was his flat.
Flat பத்தியே பிரச்சனை இல்ல. Land UDS உங்களோட தானே எல்லாமே. Builder எங்க UDS இருக்கும்? Builder எங்க UDS? The builder எங்க தான் எப்பதான் ஓனர் ஆனா? ஆவே இல்லையா? Everything belongs to you.
So it's not only particular flat.
It's not particular flat also, but UDS you sell it separately, right? In Tamil Nadu, what you do is your sale agreement is only for UDS. Sorry, sale deed. And construction agreement is signed for the flat.
So construction agreement will be done by the builder and sale agreement will be done by the landlord.
Normally. Even sometimes sale deed is also done by the builder in the under part of the contract.
So before CC the sale transfer happens.
Everything will happen. No, even for one piece, if it happens, that's all. The entire clause will not happen.
See, but
It was
100%
brought in with the genuine this thing. You are only a pure landowner. You are not involved in development. Now, I'll give you one more googly to all this.
So suppose it's only 60% is transferred and 40%.
What is getting transferred?
The
apart, even one UDS, it will happen. No, even a part.
Extension transfers his share.
Huh.
So his share means
That's what I'm telling you. Like when it comes to in the western region or northern region, they have a different this thing altogether. The whole this thing gets transferred to a society. And when it gets transferred to the society, after the completion certificate, the society itself gets registered only after the completion certificate is done. Before the occupancy certificate. There is a completion certificate.
so only in that
After that, there is a occupancy certificate. before the occupancy certificate, the society gets registered, the entire land is transferred to earth and it issues share certificates. That's how it is done. Here in this part of India, we don't do it.
Sir, so we are discussing about the entire piece is held by a landowner or group of landowner, and so it will be demarcated who is having ownership. There is a scenario wherein it's already a 30-year-old apartment. So each landowner will get each flat owner will get their UDS only. So in that case, how will it be bifurcated? Like I am owning a 30-year-old apartment.
I'll tell you this. Okay. Typically, yes. Almost all teenager and Mamlams are all very old. Okay, more than 30 years. Many of them, many of Ram constructions and Chola, this thing and all is more than 30 years. Now let's say that there are about 20 apartments in a complex because of higher FSI. Okay, you'll be, that's where the look for the builder also put picture. Okay, higher this thing FSI and old building, if you see, all around you will have space, probably trees as well. Now, once it is reconstructed, you will not find those trees, no spaces. Everything will be used. And he'll say, sir, today you have, madam, you have 300 square foot today of apartment, 1000 square foot of apartment today. I'll give you 1300 square foot of apartment. Okay. But what you need to do is 10 or 20 or rather 25 square foot of UDS you have to reduce from your this thing. Okay, 1300. You don't have to pay anything. Probably I'll give you another 2 lakh for 10 months, to stay somewhere else. This is how he'll give. There is being, then he'll sell, probably he'll build about 50 apartments in that, instead of 20. Not 30. Either you yourself will purchase, one of you will purchase, or it will be sold to an outsider. When the transfer will happen? Without transfer, will somebody give money?
So ultimately, my UDS will be sold to the
Some portion of your UDS will also, all UDSs will be consolidated and it will be re-given to you as well.
So
You will not just sell
apartments.
all the existing flat owners will all be the vendors. Will all be the vendor giving to one of the 30 who's coming up.
So when I sell the new apartment, date of acquisition will be new registration date.
Obviously. That's how it has to be used. So this is why it was brought in. It is brought in for a specific purpose, where it was. So that doesn't apply to this part of the world. Now, specific agreement is another thing that we need to look at. Means a registered agreement, a registered agreement in which a person owning land or building or both agrees to allow another person to develop a real estate project or such land or building or both in consideration of a share being land or building or both in such project, whether with or without payment of part of consideration. Okay. Now, more important is it has to be registered. JDS, how many JDS gets registered? ஒருது கூட ரெஜிஸ்டர் அது இப்ப பண்ணணும்னா என்ன ஆகுது காஸ்ட் சத்தியமா போட மாட்டாங்க. So the entire provision of 5 years that we all think is applicable does not apply at all. Especially to this part of the country, it doesn't apply at all, 100%. Every time I speak on this or when I discuss with professionals, they say, "Sir, adella covered sir, illa settled sir, inga settled." Oru settlement illa. Yena to give that registration fee and every amendment that you make also needs to be registered. It's going to cost heavily. And who will pay for that? Builders are not. "Na panna maathen sir, venna neenga pannuvaano." So, but out of packet appiye kayoda. Nobody would do it. That's why the old problem.
But the new consolidated value will change that, the full guideline.
Daily value, how do you think it's going to change?
Because the new registration is saying composite value of the registration.
Composite value, why they have said that?
You cannot separate construction.
No, let's understand that. Okay. Why? First the intent was to say that a building மட்டும் பண்றானா 1% construction agreement 1% அவங்க பே பண்றாங்க stamp duty எப்படி ரெவென்யூ இன்க்ரீஸ் பண்றாங்க காம்போசிட்டா கொண்டு வந்தா மொத்தத்துக்கு stamp duty வாங்க that is the purpose of it. Now you show still the UDS portion
You show the
in the composite. Only thing, instead of two different agreements, you have made it as one. You still have all the, it's similar to what you did earlier. It's like saying, inter இருந்தது PE2 இது ஒன்று வந்தது அதுக்கு அடுத்தது வேற ஏதாவது மாறுறது இந்த மாதிரி மாறுறதா பேர் தான் மாறுறதா only benefit that the government gets is that கன்சால்டேட்ல ஒரே இது முன்னாடி வரை அதிகமாக வரும்.
Earlier they were paying GST on the construction, now you pay GST on the entire value composite value.
If it is done prior to CC.
Yeah, right.
Completion certificate is issued, then you do not.
No GST. I'm saying prior to that, both levels.
Correct. You have to pay both.
So what if there are 4 sisters, north, south, east, west, 4 sisters, property, and the builder is signing with 4 people. So if one side is given, balance 3 they can claim this 600. I'm asking.
Practically, how you do is you enter into one agreement. I'll tell you, recently I told you about plot, which Madam told, where plot அப்படி பண்ணிடலாம் சார், they construct பண்ணா the TDR வருமா வராதான்றதை பார்க்கணும். அந்த கேஸ்ல எப்படி இருக்குன்னா 2 individuals and 1 partnership firm. And partnership firm is owned by these 2 individuals only. First வெளியே வரப்போறது இல்லை. இப்போ அக்ரிமெண்ட் போடும்போது எப்படி போடுவோம்? தனித்தனியாக போடுவோம். ஒரே JDA தான். அது எல்லாத்தையும் கன்சால்டேட் பண்ணி ஒரே டாக்குமெண்ட்ல தான் போடுவோம். மொத்த இதுக்கும் பிளான் எப்படி சப்மிட் பண்ணுவேன் நானு? இதுக்கு தனியா பிளான், இதுக்கு தனியா பிளான் கொடுப்பேன்.
ஒரு செட் ஆஃப் பிளான், இன்னொரு செட் ஆஃப் பிளான்.
நான் பேர் சொல்ல விரும்பல. ஓகேவா? சதுரமா இங்கேயாவது கொண்டு போய் விட்டு CMD அப்ரூவல் மட்டும் வாங்க சொல்லுங்க. சதுரம் CMD அப்ரூவல் மட்டும் வாங்க சொல்லுங்க. போதும், வேற எதுவும் வேண்டாம். Practically impossible.
Sir, actually for the landowner.
Two individuals are insured, right? That will be possible.
Which one?
First marriage are not eligible. Individuals and insurers is eligible.
Niche பண்ண.
So the same 2 brothers are insured, they get claim?
No. If it is an HUF, and you have to mind and this thing that whenever you transfer a property to an HUF after 1971, clubbing. If you are clear of that provision, then fine. Now we'll come here.
Why is it practically impossible?
Which one?
Like I said, not so.
Cost will be very high. Today, if I can tell you, if you go through somebody, some square, okay, you have to pay 4%. If you go individually, okay, it will be 10%. 4% plus some fee. Roughly 5% for you. Okay? Otherwise it is 10% for you if you individually go. Individually in the sense, you may be a big corporate.
But
Construction company is still 10%.
But then I can have this by a provision, I can pay tax later, right? So in that situation,
We'll discuss it later. Okay? It is practically impossible. 10% வெறும் அப்ரூவல் வாங்குறதுக்கு ஒரே ஒரு அப்ரூவல் வாங்குறதுக்கு நான் கட்டிட்டேன்னா செலவு பண்ணேன்னா மத்தது எங்க போறது? எனக்கு என்ன மார்ஜின் இருக்கும்?
காசு இல்லை கையில், லேண்ட்
அப்பா உனக்கு இல்ல பில்டர் தான கட்டணும் பில்டர் கட்டுவானா நான் 10% அவன் எப்படி திவாலா போவான் ஓவர் டாக்ஸ் வர மாட்டாது. Now 45(5) deals with only capital assets being in the nature of land or building. This is something that we need to be. வேற ஏதாவது இருக்க முடியுமா? land building இல்ல. probably the home account. சில டைம் வந்து தெரியல அப்படிங்கிற ஒரு கம்ஃபர்ட் ஜோன்ல இருந்துறாங்க. அதான் ப்ராப்ளமே. சரி அடுத்து the transfer is well defined. Now we all know under section 2 subsection 46. No deviation is provided for on the term of transfer even under subsection 5. This is something that we need to know. Okay. So all this 53A would kick in to do it. Otherwise it is not done. Now what they have done is the date of transfer is made rigid as one particular date is made as the date of transfer. Instead of transfer, in a flexible, manner. Now, when we say in a flexible manner, now what can happen is that let me give you an example to tell you this. Now I enter into a joint venture agreement. Okay. Today, with or without possession. We saw all this, right? So many different dates can be taken in for transfer. Transfer is the point of taxability. What 45(5)A does is that it does not change that at all. Transfer is the point of taxability. What it does is that it only shifts the date when the tax has to be paid. Analogical சொல்லணும் அப்படின்னா we all know in central excise what happens. Central excise, the trigger event is manufactured. But when do you pay the excise duty? When it is shipped. Good sir. Either from the factory or from the first. The same thing is done by factory. Nothing else. So, all your clever drafting, all that still stays. Your Chaturbhuj to Potla, everything stays till date. Nothing changes, even if it is individual and HUF also. It is not changing. It's only shifting. Meaning, what in other way? Now, when we say taxability, my rate of tax, the benefits I can get, all that will be as applicable to the assessment year concerned with the date of transfer. Let's say in the year 2019-20, I enter into a joint venture agreement. Let's say that's when the transfers, 1920. Now the completion would happen in March 2025. The taxability would be at the same tax rate, same benefits as that of 1920. Tax rate na veru 20% solla nanu. Indexation can also be only up to that date. ஐயோ ஆனா இப்போ பேசும்போது என்ன ஆகும், எனக்கு இன்ஃப்ளேஷன் ஆட் அப் ஆயிருக்கும், அதுக்கும் நான் வந்து டாக்ஸ் கட்டணும், அந்த பெனிஃபிட் ஓகே. That's why we say that the date of transfer alone is frozen by 5A and it does not give you anything more. Let's take another instance to understand this. A capital asset is converted into a stock in. I mean, Narayanan, I want to question any question. Time we have. Where a capital asset is converted into a stock in. Now, we all know that when is the capital gain? The date on which the conversion happens. But when do you pay the tax? Sale of that stocking. Same thing applies here. Exactly this is what is happening with fine, not otherwise.
The rate of conversion.
That's why.
Sir, I have a very
Yes.
practical scenario with respect to, not with respect to stock in trade. Recently it happened, 1920, assessment year 1920, JDA entered. 2021, using the power of attorney, the builder sold part of the undivided share to a new buyer.
Okay.
He took the money, vanished. 148 notice has come to one of the landowners on the basis of the registration document.
Obviously, no, because only an agent. You are the principal. இது ஒரு கேஸ் இல்ல ஓடி போகாம இருந்தாலுமே வருது. Majority of the cases, if you leave out surveys, section 68, 69, 69A edition விட்டா பாக்கி எல்லாமே கேபிட்டல்ஸ் தான். உலகமே இதை சுத்தி தான் போகுது.
And the problem is the case is with the RERA. They filed a suit against the builder, all those things are happening. But the liability for the landowner to declare the capital gain and the
Correct.
paying tax or
Suppression
without having anything.
Suppression length everything will come.
Exactly.
Suppression length everything will come. அதுல வேற எவனாவது நான் வந்து கேஷ் வேற கொடுத்தேன் நான் இட்டா முடிஞ்சு போயிடுச்சு.
Constant.
ஏதாவது ஸ்டேட்மெண்ட் கொடுத்தா அது வேற போயிடுச்சு.
Capital asset is the stock in trade amount. But what if it is from stock in trade to capital asset? Now capital gain won't apply when only when sale happens regarding capital asset. But the stock in trade to capital asset. So a DGDP applies. So what will be the tax regarding the DGDP? Can you understand the question? Stock in trade to capital asset. So when capital asset is sold, capital gain arrives. But there's conversion from stock in trade to capital asset, that's PGDP. So what will be like, it will be, what is the price,
No, let's understand this.
I don't know.
No, let's understand this. Let's understand, this way. Now, what do I mean by stock in trade? What do I mean by capital asset?
Stock in trade, I'm just telling you the
Stock in trade is something that I kept to be traded in the normal course of business. And it becomes a capital. When you say capital asset, what do I mean? Meaning, I am going to use it for a permanent or for an enduring benefit. Depreciation.
when stock in
When
trade.
it's a capital asset. What do you mean by in commercial terms? Capital asset is nothing but a fixed asset, right? Yeah, depreciation applies. You don't have an intention to sell immediately. So you will convert that, from entry into double entry.
I'm converting.
கன்வெர்ட்டிங் தான் சொல்றேன். என்ன பண்றோம்? பேலன்ஸ் ஷீட் கீழ இருக்கிறது மேல கொண்டு போறோம். கரண்ட் அசெட்ல இருக்கிறது மேல கொண்டு போறோம்.
இன்கம் டாக்ஸ் அஃபெக்ட் ஆகுமா?
எப்படி ஆகும்? ஒண்ணுமே பண்ணலையே, டிரான்சாக்ஷன் நடக்கலையே, நடக்காம எப்படி ஆகும்?
கன்வர்ஷன்
எப்படி ஆகும் அது? அசெட்டுடைய இது என்ன மாறுது?
அப்போ ஃபார்ம் ஆஃப் வேல்யூ டாக்ஸ் ஆகும்.
இது
Stock in trade is converted to capital asset. So on the time the PGDP.
இல்ல அது ஓகே சரி. இப்போ நான் வந்து அது கேபிட்டல் கெயின்ல வராது இல்ல?
That is PGDP. I'm talking about PGDP.
So what he's
Stock
asking
is
is,
rate.
I am a builder. I'm building 20 flats. So one I'm retaining for my personal purpose or whatever as a
fixed asset.
fixed asset. So what is the point of taxation for PGDP and capital gain is what is that?
When you do it actually, when you do it, there is no conversion that happens here.
Books conversion is same.
So
கன்வர்ஷன் எப்பயுமே என்னன்னா டியூரபிலிட்டில இருந்து நான் வந்து வெச்சுக்க போறேன்றதுல இருந்து மாத்தினாதான் அது கன்வர்ஷன். ரிவர்ஸ் கன்வர்ஷன் இல்ல. நான் ஸ்டாக் விற்கிறதுக்குன்னு வச்சுருக்கிறத உன்னை எனக்குன்னு எடுத்து வச்சுக்கிறேன் அப்படின்னா ஓகேவா, அது கன்வர்ஷன் கிடையாது. Retaining is for myself. அப்போ to that extent what happens is that it is going out of your business.
No, the books is different, right? You mentioned in the books.
That's what I said. The date on which there is no significance for date in that case. Your acquisition is not date. When you sell that fixed asset, capital asset,
Forget about capital asset. No, like it got into fixed asset. It got into fixed asset. PGBP applies. So the fair market value will be as the returns. Either can I claim any deduction for that? Can I claim deduction as right or no?
what direction you claim?
See, cancel at PGP.
I bought the property and all that. And all, can I?
Property and all that you can expense out. This thing will be in debt only, right?
No, that's not.
You would have capitalizing, you will take all this thing. I think it's taking us away. It's taking us away. Capital asset and depreciation. School of Interla படிக்கிறது ஃபவுண்டேஷன்ல இருக்க தெரியாது. அதுல படிச்சிட்டு whatever expenses you incur to bring the asset to the current state, all that has to be calculated. It can be depreciation. அதான் இது. சரி, we'll move on.
Can we move exemptions, sir?
Sorry?
4 sections. Can we move exemptions?
Exemptions.
Can we move it?
We'll move away.
So you had mentioned it.
Section 45(5)(e). Okay, issues what we have. Okay, holding period. Holding period. Okay, is the first issue that we have. So we know short term, long term, depending on the holding period. Let's say that I bought a property in 2018. I'm entering into a joint venture in 2020. But actually it gets sold only in 25. Is that short term or long term? It is all with reference to the date of transfer. Date of transfer is 19, 20. It will be a. Let's reduce that gap. I buy, within 6 months I enter into a joint venture. Only after 7 years I sell. The holding period, what will happen to it? You lose all. You understand this? And if we go strictly by 5 years, we'll move on. This just an example what I told you. 6 months it's sold after 5 years. What I exactly told you, what you answered, is there in this.
Short term.
Sorry? Short term. Short term only, even though, actual sale happens after 5 years. Now the second issue, that's on holding. Second issue is on the indexation that we have under 5 years. Now, indexed cost is only up to the date of transfer. Everything is linked to that. You will not get. Short term you are not going to get at all, even though actual transfer happens after 5 years.
Sir, in
Actual
case
benefit comes to you after 5 years.
in case I get the possession of a property through a settlement deed,
To the previous owner. From the previous owner, you will have the indexation and also the holding. You will get that. Hardly would twist it. If life interest is retained by the settler, what will happen? What will happen?
Then it is only after the.
Let's say after the death of the settler, you will get the full rights. Then what will happen? Are you still a owner during the previous period?
No.
That's a big question mark. அதெல்லாம் இன்னும் தெரியல இன்கம் டாக்ஸ் காரனுக்கு. நம்ம யாராவது போடா சொல்லி விட்டுறலாம். அதான் சொல்லணும் இனிமே. எங்களுக்கு மத்த அமைச்சர்ஸ் எல்லாம் விடுப்பா. வந்திகளுக்கு இது போட சொல்லு. நாங்க எடுத்து உங்களுக்கு இஷ்யூஸ் கொடுக்குறோம். அவுட் சோர்ஸ். ஃபால்ட் ஃபைண்டிங் சொல்லிடலாம். So indexation issues this for us. Okay, very clear. Now, second is if you take if it is prior to April 2021. Sorry, 2001. Then what will happen to then you still bring it as of fair market value as of 1st April 2001? That's a big question. That's still around. This is one interesting judgment of Karnataka High Court. Rudra Industrial Commercial Corporation. This is with reference to section 45 subsection. Before this, I'll tell you one more case. Land and building both are there by an entity. You all know land gets depreciation. Building gets depreciation. I sell it as one lot. Can I claim indexation or not? A depreciable asset, whenever it is sold, the sale consideration less the returned on value, the balance, whatever amount comes, that's a short-term capital gain, always. So indexation is not available for it. Can I bifurcate these two? The amount is unknown then, it's one amount that is given, one lot means one amount, right? What happens then?
Amount has to be bifurcated for land and buildings.
அப்படி இல்லையே ஒரே ஒரு அமௌண்ட் தான் இருக்கு ஒரு லாட்டா போட்டுருக்கேன் நான் சேல் இல்ல
So then registration
Typically
registered
registers
is for value for land and building
But
or
I
at least
claim
guidance value.
depreciation for both.
No, the servicer adopt some guidance value for
That is for
land.
sub-registrar. That is sub-registrar. What is yours?
No, that is basis. Some portion is given for land, balance is for building.
Slum sale is there. Slum sale entity particular than slum sale, what is the concept?
Unfair undertaking.
Individually you are not assigning value. So it's slum. Right? You are getting benefit there. Otherwise, it's a similar point. You cannot say, அப்போ ஸ்லம் சேல்லேருந்து தான் என்ன பண்ணுவோம் நம்ம லேண்ட் பில்டிங் தான் ரெஜிஸ்டர் பண்ணுவோம் அதுக்கு ஒரு வேல்யூ கொடுப்போம். I'm not doing it. Let's say I'm selling my business on a slum sale basis. Individually I'm not assigning. Land and building has to be registered. When I register land and building, don't I give value for registration purposes? Then how it will be slum sale? We go by the same analogy. Then the whole transaction is not slum sale. So that doesn't hold. So this issue is there at large. Whenever businesses are selling their property, நமக்கு தெரியுமே டிவி ஸ்டாப்ஸ் சொல்லுங்க அப்புறமா என்ன சொல்ல போறது தெரியல என்ன ஸ்டாப் சொல்ல போறது தெரியல தெய்வ உயிர் எடுத்து ஆஃபீஸ் construction is happening, that land is sold completely. It had both land and building. Building they would have got depreciation. They would have claimed depreciation. Even if they have not claimed, 32 amendment government deemed to have been depreciated. Right? I mean now that. And we already have cases. Okay? Already TCA is up in Madras High Court on these cases.
Land portion is long term.
Sorry?
Land portion is long term.
Department is saying no, until ICAT has told no. No long term, nothing. Everything is short term, pay at 30%, no indexation. This is what ITHP has told, ITHP Chennai.
No, originally land was purchased under constructed means.
நீங்க என்ன வேணா பண்ணிக்கோ, நீங்க விற்கும்போது என்ன பண்ணீங்க? அசெட் என்னவா இருக்கு? விற்கும்போது என்னவா இருந்தது?
The Supreme Court never heard it.
I apportion the value as to for building and land.
சார் நீங்க விற்கும்போது என்ன பண்ணீங்க? அதான் சாரி இது சொல்லுங்க.
Supreme Court never heard this case is there on long-term capital asset. Now if it is for more than 24 months, 36 months, Supreme Court says it can be long-term capital asset also. Dempo investments case.
No, it can be, but when it is one lot sold, how will you do it? I will say as a department, say let's say about 1 crore is sold, 2 is there, I will say proportionate 70%. The logic doesn't apply in case of this thing, and you can't extend. That's why all this is legal friction. Capital gain, it's a legal friction. Your logic doesn't extend it. Now, we look at this. This is rendered in the context of section 45.2. Immediately when he said 45.2, I remember this. If you look at explanation 3 to section 40, I've just reproduced that, just for your understanding. An amount which bears to the cost of acquisition the same proportion as the cost inflation index for the year in which the asset is transferred bears to the cost of inflation for the first year in which the asset was held by the SSC, or for the year beginning on the, then it was 1st April 1981, now it is 2009. In other words, nothing but you index it based on the date of transfer to the date of acquisition. And a harmonious interpretation of these two provisions, both 45.2 and explanation 3 to section 48, what they said, fair market value, the second line if you look at, of the asset on the date of conversion is what you need to look at. Then the market value on the date of transfer is what you need to look at. These two are two different. Your book value is different, from your fair market value is different, from your market value is different. Fair market value is market value that you feel that it is fair. Market value is something, or the transaction value of it. Now, therefore when they go to say that the date of transfer is in the year 1993, the cost index for acquisition is 161, okay, erroneously taken there. Now this is what they've said. Now, what it implies for us is that, let's come to section 45.2 and section 45.5. Let's compare this, the same this. In case of conversion of capital asset or investment into or stock in trade, there is no actual transfer that happens at this point of time. It's only a nominal that we talk of happening, and actual transfer happens under 45.5A. If we say that 45.5A holds what? You understood this? So until then, it can be even a fair value that you say to be fair.
Basically, you're trying to say on the date of conversion to stock in trade is not a transfer is on the date of actual sale.
So the same logic should apply for 45.5A as well. But we don't see that happening. The point of taxation is not shifting. Only the tax is getting deferred and munadi sommom. Yeah. That was based on the memorandum. The intention behind bringing in 45.5A is to relieve the genuine hardship faced by the landowners. That is the intention with which it has come. If we remove that and we look at with the same analogy of industrial corporation, then probably we can do this as well. This is something that needs to be tested. We are not sure. We are not sure about this, probably needs to be something that needs to be tested. That's the only point I'm trying. So that's only when you enter into a joint venture agreement. There is no actual transfer that happens. It's only a notional transfer similar to the top. Capital asset getting converted into what? Or inventory getting converted into what? Capital asset. So now this next issue is relating to the cost of improvement that we have. Now, similar is the issue. Now, when we look at the cost incurred by the landowner, those costs may not qualify for this. I'll give you an example as to what. Now, you had an apartment, apartment complex, what they said, or a building, old building. You have to demolish that and you need to bring it. But on the day of joint venture, JDA said, was the building there or not? Can you claim the construction cost of that building as your cost? I'll give you let me break this up to tell you. Okay? Now, I bought a property in the year 1990, a land. Then I constructed it in, say, 97, 98. I entered into a joint venture agreement in 2018. Let's take for the time being that 2018 is the date of transfer. So indexation has to happen for this. What indexation you do? Either you will take the original cost or fair market value as of 1st April 2001 for indexation purposes. Now, fair market value of what? Is it the land and building taken together or not?
This construction you are being indexed with the cost.
Because this being a capital asset, I don't claim depreciation. What's wrong if I do it? What's wrong if I do it? That building is anyway dilapidated, I'm going to demolish all that is fine. That is as of today, as of the JDA date. But the law allows me to take the cost as of first, fair market value as of 1st April 2001. What's wrong if I take it?
The building was not existing.
It was 97 I built. 97 I built. But if you construct subsequent, will you be able to take it? Say 2005, 6. Can you take?
After handing over to
Not handing over, prior to that.
Is it original?
Not the fair market value.
Is it original or additional or an improved?
Original. Original to the land.
Because when you are saying 2005, then you imply your construction only at that point of time.
Correct. Correct.
So it means you will be able for indexing from that date to the date of sale.
until we transfer.
Can we take? Or is,
Indexation separately for land, indexation.
are you transferring that building? Are you transferring that building?
No.
Now what is getting transferred? Only your land. Where is that building getting transferred?
What difference does it make then whether it is whether it is after 2001 or before 2000 or at any point of time only the land is getting transferred, no sir.
That's this thing.
Now building was at the transfer.
Agreement order?
Building just land was at the transfer.
அதுதான் அது கேட்கற கேள்வி திருப்பி நான் சேர்க்கிறேன் அப்புறம் அவங்க கேட்கறதுக்கு வரும் உள்ளதுக்கு வரும். Let's understand this. This is very important for us to understand.
And if you are transferring the land alone, but building exists, it will be demolished at whose cost?
அதனால தான் கேட்கிறேன். இந்த இது புரிஞ்சுக்கல. இதனால தான் கேட்கிறேன்.
But if it is not a JDA, it is just being sold to somebody else, then we will be treating this cost of improvement and selling with the building.
காஸ்ட் ஆஃப் இம்ப்ரூவ்மெண்ட்ல எடுக்க முடியாது பில்டிங் டெமாலிஷ் பண்றது. But the asset, now let's understand. There is an asset. Okay? The cost of acquiring that asset alone you can index. Is that clear? நான் விற்காத ஒரு அசெட்டினுடைய காஸ்ட் நான் இண்டெக்ஸ் பண்ண முடியுமா? I cannot. நான் ஜாயிண்ட் வெஞ்சர் அக்ரிமெண்ட் போடும்போது எந்த அசெட்டை கொடுக்க போறேன் எனக்கு? லேண்ட் பில்டிங் ரெண்டு இருக்கிறதா கொடுக்க போறேன் நானு. அது அசெட் யூசபிளா இருக்கு, நான் யூசபிளா இருக்கு இல்லைன்னா போடக்கூடாதுன்னு நான் சொல்றேன், இண்டெக்ஸ் பண்ணக்கூடாதுன்னு நான் சொல்லிட்டாமா. எது அசெசிங் தான் சொல்றேன் நான் டிபார்ட்மெண்ட்ல யாரும் இல்ல இருக்குது. வேண்டாம் இன்ஸ்டியூட்ல சொல்லிடலாம், உள்ள இருந்து தெரிய வச்சுக்கிட்டோம். அசெசிங் பேசும்போது அசெசிங் பேசுவோம்.
Builder will put agreement for land alone.
அதுதான் சொல்ல வரேன். JDAல வெறும் லேண்ட் மட்டும் போட்டீங்கன்னா இந்த ஷெட்யூல்ல போட்டு இதெல்லாம் பண்ணணும்னு சொன்னா you cannot take indexation of building. But if your joint development agreement in its schedule carries the land and the building, then you can index it. So that's it.
No, but builder will not accept.
Sir, accepted, not accepted, நீ கன்வின்ஸ் பண்றது பொறுத்து தான் இருக்கு. என்னமா வேணா இருக்கட்டும், எனக்கு அட்லீஸ்ட் எனக்கு இண்டெக்ஸேஷன் முடியல, எனக்கு பெனிஃபிட் இருக்குல்ல, அதான் பாருங்க. அதாவது when we do it, are we thinking on these lines? விட்டுறோமாக்கியாது.
So even online, to just substantiate the points, when we try to find out the guideline value in Chennai, say for example, it asks a set of questions. In addition to the land, it is asking about the nature of building that is being sold, you know, whether it is a concrete work or how many bathrooms are there, how many fitting. It gives some value to the building also. So with that only you arrive at the total guideline value, land plus building.
Even மரங்கள் வந்து அதுக்குமே வேல்யூ உண்டு. அதான் ட்ரிபிள் போயிட்டு வரும். டிசிஷன் லிமிட் தானே.
ஒரு actually real situation இது. ஒரு ஹவுசிங் போர்ட் இண்டிபெண்டன்ட் ஹவுஸ் மதுரையில் ஒரு இடத்துல வாங்குறாங்க. ஸோ they registered land wise separately and building well in the sale. After 10 years அந்த ப்ராப்பர்ட்டி என்ன ஆச்சுனாங்க, ஆக்சுவலாக அங்கே ஸ்ரீலங்கன் refugees இருந்தாங்க. So they took all the building and everything is now only vacant plot is there. But the sale by the housing board clearly it's what is the value of land, what is the value of building. Now suppose after 10 years I am going to sell the plot. There is no building. So the indexation is only for land value?
Only for land. The asset that is getting transferred, only its cost can be indexed. Not in its entirety.
Given that I paid for land and building.
அதனால தான் இதுக்கு முன்னாடி அதை அப்படியே விட்டுருவோம்ல நம்ம. இதுதான் தெரியுமே, அப்படியே விட்டுருவோம் நம்ம. எக்ஸ்பிளனேஷன் 3A போடுறோம் to section 48.
So to claim the benefit of indexation, you mean to say, sir?
Sorry.
You mean to say that we have to read the joint development agreement and see that we transfer the land with the building.
Joint development agreement பண்ணும்போது ஒழுங்கா பண்ணணும்னு சொல்றேன். அத பண்ணாம இதே இந்த அட்வொகேட்லாம் போனா ஃபீஸ் கேட்பான், அந்த ஃபீஸ் குறைச்சிடலாம். இப்போ அது என்ன முடிஞ்சு போச்சு, க்ளோஸ். ப்ராப்ளமே ஆகுதா? பாத்தீங்கன்னா
not the advocate, sir, a chartered accountant turned advocate. Because an independent advocate may not know about these provisions of income tax.
அப்படிலாம் சொல்ல வரல. Only thing you have to be present to understand, to the implication. Without understanding any of the implication, okay, there are also good advocates who are not chartered accountant who know income tax law. I mean, only thing is that you need to apply. எனக்கு தெரியாத சப்ஜெக்ட்ல பேச ஆரம்பிச்சா ப்ராப்ளம். அதுக்கு மேல நான் பண்ணிடுவேன்னு சொன்னா அது அதுக்கு மேல ப்ராப்ளம். Just look at this. For the year in which the asset is transferred bears to the cost of index. In which the asset was held. First year in which the asset was held. The asset னு சொல்லும்போது 3 ன்ற proposition எதுக்கு வரும் அப்படின்னா அதுன்றது புரியுது. அப்படிங்கும்போது என்னது? Specific. Specifically the asset that is getting sold. போட்டது குயிக்கா பண்ணேன், கடன்னு நிறைய இதுல இருந்து எடுத்து என்னோட முன்னாடி நிறைய பிரசன்டேஷன்ஸ் அது எல்லாத்தையும் போட்டு பண்ணது. took me about 10-15 minutes and few things I've added. அதனால சில இதெல்லாம் ஸ்பெல்லிங் மிஸ்டேக்ஸ்லாம் அங்கே இருக்கும், நீங்க பாத்தீங்களான்னு தெரியாது. நிறைய மிஸ் பண்ணிருப்பீங்க. ஸ்பெல்லிங் மிஸ்டேக்ஸ் இருக்கும், இது இருக்கும், போடுது. Next one that we have is on section 50C. இது actually ஒரு இது பார்க்கணும். 45(5)(a) is a deeming provision. We all know.
So before you move on to the previous part, 45(5)(a) when you're talking about it, there's always been in my mind because because you're talking about legal friction here. See, there are two instances where asset is being transferred. The landowner is selling. When he entered into a JDA and the question is given, at that time a transfer is happening. And secondly, when that apartment is delivered and after that he is selling the apartment, the landowner again that is further getting taxed. So, I mean, now co-reading it 45(5)(a), if 45 for example is not there, ideally it should be taxed twice.
Not the individual tax credit. If you go by my version, what I would address for that. First பண்ணும்போது you show some value for the joint venture because but land எப்படி இருக்குன்னா the entire land is there in which say about 2,400 square foot is the land. You say 50-50. 1,200 square foot is the UDS that you are going to sell by JDA. My question would be, I would pay this thing only for 1,200. The next instance is that on the joint venture called whatever I get, the sale price I get, I index this from the joint venture date until the completion, kandipa 30 months out. 30 months முன்னால எவனும் முடிக்கிறது 30 months ஆகும். அப்போ அதை இண்டெக்ஸ் பண்ணி I will take that benefit. Provided the JDA provides for it in that way, in that fashion, for you to take that benefit. That's not section 1. And it is possible. It's not that it is not. And it is beneficial sometimes, depending on how you structure it. Coming to this. Now, 45(5)(a) is also prescribing method to determine value when it is received in kind. 45(5)(a) பார்க்கும்போது ரெண்டும் cash or in kind ன்றதை முதல்ல பார்த்துக்கணும். Mostly in kind by way of an apartment that you get. 5 apartments. Sorry. There is nothing in 45(5)(a) which says that you can substitute the FMV as sale consideration if FME is less than the stamp duty value. In other words, it doesn't say that section 50C would apply. It doesn't say so, right? Legal friction. My view is that you cannot extend it. If you cannot extend it, you have to go by the transaction value. And this is an issue that is cropping up now. So, guideline value of paper, இதெல்லாம் வரவே முடியாது. Transaction value, guideline value விட கம்மியா இருந்ததுன்னா transaction value மட்டும் தான் கேட்க முடியும் capital gain. 50C அப்ளை பண்ண முடியாது.
இதெல்லாம் அந்த JDA agreement ரெஜிஸ்டர் ஆயிருந்தா தான் அப்ளை ஆகும்.
இது obviously அதுதான் சொன்னேன் நான். நம்ம ஊர்ல யாருமே பண்றது இல்லையே. இல்ல அதுல 45(5)(a) தான் இருக்குமே சார். எல்லா ஜாயின் வெச்சிருக்கோம். நான் படிக்கவே இல்லையேப்பா. அன்ரிஜிஸ்டர்ட் வருது 100% வராது. ஆனா சில மெம்பர்ஸ் என்ன சொல்லலாம், சில ஃபண்டிங்லாம் வாங்கும்போது ரெஜிஸ்டர் பண்ணணும் இன்சிஸ்ட் பண்ணுவாங்க. அப்போ ரெஜிஸ்டர் ஆகும். அங்கதான் பிரச்சனை. ஸோ ப்ராஜெக்ட் ஃபினான்ஸ்லாம் வாங்கணும் ஹையர் இது அப்படின்னா வந்து ஆப்வியஸ்லி வென் காம்ப்ளெக்ஸஸ் சின்னதுக்கு இருக்காது பெருசுக்கு இருக்கும் ரெஜிஸ்ட்ரேஷன் 45(5)(a) and 50(c) both are deeming provisions. Specific, அதாவது general rule என்ன அப்படின்னா specific provision இருந்ததுன்னா அது general provision ஓடும். சாமானிய தர்மம் ஸ்பெஷல் தர்மம் ரூல் ஆனது அப்படிதான் அதே தான் கான்செப்ட். Now 45(5)(a) has to be construed very strictly. You have to only go by what it says. Nothing more. It is a logical, rational to bring it how and why 50(c) provisions cannot be applied when 45(5)(a) applies. Now Supreme Court in case of Moon Bill Limited 5990 or 574 had said ஒரு deeming provision இருந்தா second deeming provision அதை கொண்டு வரக்கூடாது அப்படின்னு ஒரு judgment இருக்கு. So based on this, once 45(5)(a) if it applies, then 50(c) cannot be brought in. And you can't say that guideline value க்கு pay பண்ணனும் சொல்ல முடியாது. அதையும் கூட அதுக்கு மேல guideline value இருக்கு, அது increase இருக்கு, அதை கூட சொல்ல முடியாது.
But in the
this is more important.
Second form, active sale value and value adopted by the supply star both are given in the column.
Let it be given. Let it be given. Not an issue at all. This is more important now when the guideline value is more than the actual transaction value.
This is only related to JDA. Typical sale transaction is there that is
No, 45(a) would not apply in that case. Yeah, அதுலயும் வந்து நிறைய carve out பண்ணிருக்காங்க 50(c).
When the guidance value is more, sometimes we get automatically notice from CPC.
Well, that's what 50(c) only. They said because of 50(c) only. அது இதுக்கு வந்தா முடியாதுன்னு சண்டை போடலாம். ஜாயின் வெச்சன் முடியாது. It's converted into this thing. Exemptions, somebody wanted to this. 54(a) இது மட்டும் தான் பெருசா ஹேண்டில் பண்றதுக்கே இருக்கு, வேற எதுவும் கிடையாது. In case of investment in new asset, benefit of CBDT circular 672 of 1993 flats by cooperative க்கு மட்டும் தான் இந்த இத கொடுத்ததே. It also refers to 471 of 1986. These circulars are being relied by Delhi High Court and Madhya Pradesh. They say even what it says in simple terms is that even if handing over of assets are delayed beyond 3 years, who was still eligible for exemption under 54 and 50. So it has been extended and it would. Can we take 2 apartments and make it one and less one living space? Will that apply for 1 or 2? We have ITAT judgment today, very clearly says you can. You can take benefit of both. Even if I have more than one house, take the benefit part. But the intention is different. We follow it, it's okay. Everybody is okay, we are also okay.
Now 2 houses can be purchased now.
Now, this one, you get displacement allowance, what I was referring to. 25 square foot UDS coming பண்ணிக்கோ, உனக்கு 200 square foot built up area அதிகமாக தரேன் உனக்கு. எனக்கு limit area பற்றி யாருமே பேசணும். built up area தான். ஏன்னா காமன் ஏரியாலையும் ஒரு போர்ஷன் எடுத்து அதுக்கு நம்ம பேசா பண்ணுவோம் அப்படின்றதுனால. காமன் ஏரியாவில் உள்ள தரேன் நான் இன்க்ரீஸ் ஆகுது உனக்கு built up area 250 square foot. பரவாயில்ல, நான் எங்கே இருப்பேன், இதெல்லாம் டெமாலிஷ் பண்ணிட்டேன், நீ அங்கே போ, இப்போ ஜாலியாக இருந்துட்டு வா, எங்கேயாவது ஒரு இடத்துல வாடகை நான் தரேன் அப்படின்னா what will happen in case of a joint venture. Compensation of all these nature. Okay. If it is a capital receipt, it is not taxable. This you cannot include it in the consideration. This you can never include it as a consideration. So, இன்னொரு way of looking at it, மொத்தமா எனக்கு பேசக்கூட நான் பாத்துக்கிறேன் அப்படி சொல்லக்கூடாது. இதுக்கு தனி அதுக்கு தரதுக்கு எனக்கு டாக்ஸ் இல்லை, அவ்வளவுதான். இதுவா வாங்குறதுக்கு டாக்ஸ் கிடையாது. இதுக்கு எல்லாம் இந்த ஜட்மெண்ட்ஸ் இன்னொரு மும்பை ட்ரிபியூனல்ஸ். அதனால எனக்கு இதுக்கு தெரியும், அதுக்கு என்னெல்லாம் அலவன்ஸ் போட முடியும் போட்டுக்கலாம். எல்லாம் நம்ம ஹெச்ஆர்ஏ சிசி என்னெல்லாம் போட முடியும் போடக்கூடாது, இதுலேயும் போட்டுக்கலாம். ஷிஃப்டிங் அலவன்ஸ் எல்லாத்தையும் போட்டுக்கலாம். Now, is this allowance part of capital gain or not? என்றதுக்கு ரெண்டு இருக்கு. There are judgments also which says that it's part of income from other sources க்கு தனியா இருக்கு. It will get taxed under section 56(2). என்றதுக்கு இருக்கு. capital gain ட்ரீட் ஆகும்ன்றது, capital receipt ஆகும்ன்றதுக்கு இருக்கு. அதே மாதிரி we have it for income. The more reliable, if you ask me, is these judgments, which are well reasoned judgments as to the rationale behind it. எல்லாரும் சொல்லிட்டு இருக்காங்க, ஆல்ரெடி டைம் ஆயிட்டு இருக்கு, நிறுத்திடுங்க அப்படின்னு. லாஸ்ட் ஒரு actually I thought I'll give you 30 minutes, for questions or anything if it is there. At least you'll learn about 15 minutes. 10% is deductible.
Sir, 194 I see that 10% is deductible on the whatever name that we call goodwill money, that money, this money is deductible.
Everything.
In such a case, how will the assessee, under what head of income will he disclose this money that is received? Because what happens is, in practical situations, the goodwill money is given in one particular year. And for that year, the builder deducts its 194 IC and gives the payment, the money gets credited. And it reflects in 26 days also. But you get the completion happen after 2 years. This 1 lakh is part of your consideration. Whatever money that you receive is part of your consideration. And your tax liability to arrive at the capital gain arises in the year of completion. So, how do
you should not claim that TDS in that year.
Just be postponed.
பாத்தீங்கன்னாவே இந்த ஐடிஆர் ரிட்டர்ன்லயே கிளைம் பண்றீங்களா அந்த விஷயத்துக்கு பண்ணலையான்னு கேட்கும்.
பண்ணலன்னு சொல்லணும் இல்லையா?
எவ்வளவு கிளைம் பண்றோமோ அதை மட்டும் தான் கிளைம் பண்ணணும். கிளைம் பண்ணாம கேரி ஃபார்வர்ட் பண்ணலாம். தள்ளி விட்டுறணும்.
Carry forward na panna. That is the correct way of.
That's correct. That's correct.
So, villa project is over. So, let's say the purchase consideration is 10 lakhs. So, on payment of 2.5 lakhs, the land was registered. Then the project paid. And recently, that land was sold. Now, the land registration, the value was shown as 30,000. It's not the 2.5 lakhs because it's on payment of 25%.
Correct.
Now, what can be the cost of acquisition when we
whatever is there in the sale deed?
assume we have some agreement, this was recognition.
No, though, now, if you look at evidentiary value, the written document will have more value than oral. Between two written documents, the registered document will have more value than unregistered document.
But it was supposed to be done as a township. And for the project field.
I'm getting you whatever you are saying.
So the same, if you have any agreement copy, that's not
what it is.
Maximum we can use a fair market value. That's not
If it is prior to
yeah, 2096, so we can use 2001 and index.
that you think.
So what happens if the JDA has been entered with a non-resident for legal purpose?
All individuals and HUF are eligible, whether they are resident or not. This provision is fine.
So, 194 IC, there is applicable only for residents, right? For case of non-residents?
195.
Same
Because what
percentage.
happens is now, for example, sir, Chief Minister,
No, the rate of TDS and also.
Rate is 50%
20%.
subject to 50%
Maximum.
subject to maximum. Subject to your double taxation. Land being here, it will deem to accrue only in India.
so 20%.
If he doesn't have a PAN, 50. Tali Kandida. Sorry? 20.
So nowadays what's happening is now the department is requiring the buyer is a resident and seller is a non-resident, as you mentioned. The department is requiring you to take time also. The buyer has to take time.
Yes. That's a procedure, you know.
I need information about it. Correct?
So in that case,
You can also pay lower rate of taxation.
no deductions, but
Lower rate of TDS.
So at that time, what if 5 cases, when 50C is applied on the landowner, so when he is selling his part of the construction, sir, can he claim the cost of acquisition, the 50C value is the cost of acquisition? Because he is paying capital gains tax on 50C value when he gets on the
That's why
land.
it's called deeming provision. He cannot claim 50C, that guideline value as part of acquisition, he cannot. The actual cost that he says as per the document is can alone be the cost of acquisition. Because it was brought in for a specific purpose. Mostly they said, black money.
Sir, I have one practical question. This is non-JD question. Generally, when the investment capital gains accounts here, we are having a practical problem while filing the return. In the year of sale, within the 6 months or whatever, this person is investing in the scheme. So I show, okay, so much has been invested. For some reason, whatever investment he was going to put it into, that failed, he was not able to buy that flat or whatever. So 2 years later, he has withdrawn the amount from that scheme. At that time, if we try to pay the tax on that, the income tax form will not allow you to show the date of sale as a 2 years ago date. So we are showing the current date, and the assessee is actually getting a benefit in terms of indexation. And we are doing that. We are making them pay more tax also because we don't want trouble in the future, and we are getting the refund back from department.
They have to change. What you say is right.
It has happened for last 3 assessment years. Before that it was fine. I think from 2021 or something the form changed. So from that time, even if you try to, in one case you try to manipulate the form because they are already.
It doesn't allow. It doesn't allow.
You will get an effective return immediately. Whatever you try to do, it will bounce back. It will say you pay only, you put the date only as within this date or this date. So now sometimes they are not deliberately, some clients are doing that. They will to my knowledge, I don't encourage this, but I realize somebody has done it. Yes, I am going to buy so much of flat, and came back and said, no, and it's fallen through. He got the
benefit of indexation for 2 years.
Interesting.
I am only worried.
If you're caught, that's it.
I am only worried that it will get caught at some
Faceless, no, sir. Everything is like, you can always claim that the form doesn't allow it.
Yeah, so we are preserving copies of that version of the form as of that year. What else?
Sometimes when engineers start working, doing what happens.
So release deed executed by your brothers, compensation is paid. Is it a transfer or?
It is, consideration is paid, then it is a transfer.
Capital in case of agriculture land,
Agricultural land to one exemption.
exemption, we can claim exemption. So you have to disclose in the form itself.
Yes.
And capital gain there also, and the exempted also.
Because sale, release, relinquishment, all these are part of consideration. 47 247.
So earlier you were talking about how the transfer happens in the northern part of India, where the landowner is there and then to say a group of land. Say one landowner in case of this, sake of simplicity, is JDA and JDA. They will say it gets transferred to a society and then society rates. So can you explain in details?
Now what happens there is no concept of UDS. The entire land gets transferred to the society. The society is formed. After the completion, before the...
What is not taxable, of course, the transfer
they get a very nominal stamp duty. And from there, it issues only the share certificate. A sale agreement is entered into for the particular occupancy. And whoever has that particular flat or that office, that person will be issued one share certificate. Let's say certificate number 003. It is issued to me. Then when I am selling that to you, what I do is that I will execute a share transfer form in your favor. I will also execute a sale agreement which gets registered or a sale deed which gets registered. It varies, whether sale deed or sale agreement varies from state to state. What happens is that you pay the stamp duty. That's why stamp duties are very less. Stamp duty on the sale deed, and you pay a duty on the share transfer. That's all. Share transfer, that is 50 paise for every 1,000. Same.
What happens in complex cases when there's mergers happen? Like the asset has come to a company because of mergers or some kind of acquisition. And of course, stamp duty will be paid on whatever the state laws on the merger value. So in that case, the indexation how will be? And then probably we are going to develop it.
Indexation will be that of the original owner, the company which got merged. That date of indexation.
There you go.
Any other questions? So we'll say Narayanan. Thank you. All of you.